Alright guys, welcome back to the channel. We've got a lot of data to get through in today's video. Yes, I'm still bullish, but because of the probabilities, I think this has a higher chance of happening next. What does that mean? I'm looking at least a pause, maybe a correction. How far will the correction be? Let's dive into the analysis to uncover what that correction might be. Make sure you hit the like, subscribe to the channel if you are new here. I'm going to go through Bitcoin, the traditional markets, the macro space, and then touch on this video yesterday as we had some pretty good feedback on this. Stop wasting your time with altcoins. Do this instead. That'll be in the second half of today's update video. And just a quick mention, we have a sale on TIA Premium. More on that in just a moment. But let's start with Bitcoin and the elusive downtrend resistance that we still see at the top of every single cycle. Now, I'm still leaning on the side of Bitcoin potentially breaking through here. I still have a few more things I want to see happen in the market first. I don't know if we've got the energy to do it on this particular run up, but I think overall there is still the potential to take out this top because of the time that we have left. Yes, unfortunately, for those that want something fixated and guaranteed, well, you must have to admit that the market does not give you guarantees. Just when you think things are going your way, well, they come back the other way. So there are no guarantees, and you've got to be watching what's happening day by day. Or if you've got a longer term position, then just switch on week by week. You don't need to be glued to your monitors. So we're still here, 2017, 2021, 2024, 2025, and here we are again in May 2025. So coming up to the middle of the year. Yes, the overhead trend line is still there. Let's turn on our swing indicator and why I think there's a correction or at least a pause building. Let's go back to the data. I shared this with you the other day, looking at the swing ranges. So this is our Gann swing indicator. The link to this is in the video description. It's what I use for all of my trading. So looking at entries, exits, whether that's an exit with a profit, whether it's an exit with a loss, if things get taken out on swing lows, but you're going long. Anyway, we're looking at the data points here to the upside. So we've got 6 weeks to the upside. Now, those who are covering their colors, that is going to be different because this bar here, or in this case, candles, this one is green, but it is actually a down week. Okay, you got lower lows, lower highs. So that's actually what's happened on the price, but it closed stronger. So you end up with a green week. So 1, 2, 3, 4, 5, 6, 7 green weeks. But in terms of a swing, we're at 6. And we're using the swings here. This starts from this point. 1, 2, 3, 4, 5, 6. Okay, so don't get too confused here. It's really, really simple. We're looking at swings. Now, in terms of this bull market, and that's where this data comes in, if you're using this, playing at home, just go to your settings, and I'm looking back 131 weeks because it takes me right back to the beginning of this bull market, which is another very, very important point. Here is the low of this bull market. We are 131 weeks into this bull market. This is not the beginning of the bull market. Maybe there's a beginning of an alt season, as I'll have a look at in just a moment. Altcoin season loading. But for now, Bitcoin, we're 131 weeks into this bull market, and previous bull markets have lasted about 150 odd weeks. So there's really not that much time to go in the bull market if it is going to repeat. So in terms of the statistics, swings to the upside in terms of weeks, we have one here that was 6 weeks in this swing, 8 weeks in this swing, 7 weeks in this swing, 5 in this swing, 6 here, and now we find ourselves at another 6th week. So when you start to put the numbers together, and I'll bring those out here, we have upswings. So just looking at these yellow lines that go up, the total of those is 29. And of course, the downswings is going to be 1 less because we're currently in an upswing, so it's 28. But we're focused on the 29 for now, just the upswings. And the up only that have 6 or greater weeks is 1, 2, 3, 4, 5. So 5 into 29 gives you a percentage of 17%. So 17% of the time you'll see at least 6 or more weeks in a swing. 17%. Then for it to go to the next week, so the week that we are currently in, there's only 5 days to go in this week. If we're to get to 7 or greater, there are only 2 other times that this has happened in the entire bull market, the entire 2022 to 2025 thus far bull market. So that now drops the probabilities that this week is going to break the high of $112,000 down to 6.9%. So yes, there is still the possibility. As I said, there are no guarantees that this is like exactly a 0% chance that it doesn't go higher. But we now have something objective, and there is a 6.9% chance that this week that we're currently in will go above $112,000. Now, if that's the case, you're into this zone here, the 7 and the 8. How many times have we seen more than 7? So could it go up this week? Yes, you got 6.9%. Could it go up the week after, basically coming into the first week of June? Could it happen? Well, yes, it's happened once before. Here it is, 1 into 29 is 3.4%. And now if we're to go to 8 or more, if you think it's just going to keep going up without having a pullback or a pause, then you go into the 0% chance, only because we haven't seen it this cycle. We have 29 upswings. We have even less that have gone 6 or more. So pretty much just going on the side of the probabilities. As I said, I'm still bullish, but the statistics would suggest that we've got at least a pause coming up or a correction. So that then leads us to the correction. How far can the correction be? This is the average, median, and maximum that we've seen in this bull market so far. But just before I get to that, let's just have a look at the combined data here. So looking at total swings now, anything that is 6 or greater swings. We haven't seen any 6 weeks to the downside. That would be mostly because, well, we're not in a bear market. If we were in a bear market, you'd see a lot more weeks in the downtrends, but we're not. But if we combine it just for the percentage sake, 6 or greater, you're down at 8.7%, 7 or greater, 3.5%. So it's pretty unlikely that we would see 7 or greater, although yes, even if you get a few cents above, that would then swing it to the upside and you'll get 7. But I mean, I don't think anyone's here to trade a few cents on BTC. Now, the averages and the median, the downswing is at 15% for the average and the median is at, call it 16%, really not far off. Then we basically double the average and we get the max. Not that that happens all the time, you wouldn't double it, but just looking at the stats, 30% is the max. Now that is within a swing. That is not talking about the entire range, which of course you can see is 33%. And the most recent one from the January to the April range is at call it 32%. Okay, this is just the swing itself. Okay, so in terms of the swing, 15% from this current point brings you to about $95,000. 16% is $94,000. And if you want to take it to a maximum of, say, 30% within a swing, so basically no sign of a breath to rally, 30% takes it all the way down to $78,000. So still above these lows, but that would really take a ton of wind out of the market. So if we go somewhere around the average, doesn't mean, remember, averages don't have to be exactly dead on, but for the sake of the statistics here, we're looking at 15 to 16%, somewhere around $94,000, $95,000. Well, that 15 or 16% doesn't look so out of the question. Now, it's just an average. Sure, it could be a lot less. We may come to the tops here at around $98,000 or $99,000. But even if we've got that roughly 15, 16%, that would take you down to the 50% level of the range. So yeah, I'm throwing a lot of numbers out at you, but we're just looking at this on a longer term basis. If you're in the markets, you should be able to keep up with this. If you're not, take time to review your plans, get set for the end of the cycle. TIA Premium is on sale this week. If you need a helping hand with navigating the end of the cycle, you can check that out, link in the video description. That would still leave this market in a relatively strong position. As we've covered before, I like the look of something above $99,000, $100,000 just because of where the market has sat previously, and then with a few of the other angles that are coming from previous highs. Just looking at how these lows have continued to form on the way up, continuing to give us strength for consolidation. So that's a look at BTC and the statistics of, well, the longer term, the bigger picture here is still bullish. We haven't seen any breakdowns. You know, the monthly is still looking pretty good. We've got 4 days to go for a close. Ideally, we get the highest monthly close in history. That would mean a close above $102,500 because the previous highest monthly close was January at $102,400. So anything above that number in the next 4 days is going to be the highest monthly close in history. So it's still a relatively strong sign. However, some of the stats for the weekly close are suggesting that there would be a pause or a correction in the not too distant future. Using the same analysis on the S&P 500, we've seen 6 weeks up. So we're starting to get a little extended here. Checking out the stats below, you've got the average for the swing range. So now we're using the exact same thing, GansSwing Pro, on your stock markets to assess the strength and the weakness of this market. And I'm still seeing relative strength overall. The average upswing is 7%, but of course we've seen a greater than downswing. The average downswing is 5.5%, but look at this swing that we saw in April. That was 17. So naturally you would see a larger average rally, a larger rally than the average if you're still in a bull market, or at least in a market that is trying to decide whether it's ready to go up. If you're getting a weaker market and a bear market, you'd probably see a lower rally than that would put in some higher lows and then continue to fail on the way down, like you can see in some of these smaller corrections or in the bear markets themselves. So in terms of the swings, this one's super, super interesting, looking at the entire moves that have lasted anywhere between the short period, sort of like 60 weeks, for some of the longer ones here, 2 years, 3 years, 2 years, sometimes even 4 or 5 years. You've got this. Well, I've got this on the chart here, looking at the maximum number of weeks in a swing, and then I'm separating these through to severe correction. So this is the 2015 correction, this is the 2018 correction, this is the 2020 correction, this is the 2022 correction, and then we have the April correction. Anyone that is looking at the chart right now can see that they were some of the most severe corrections for the time. 2015 doesn't look like it now, but do note, coming out of the GFC and all of these smaller corrections, 2015, that's here to here, that was basically a nothing year, and with 2 severe corrections considering where you'd come from. Remember, none of this is on the chart. So to put that into perspective, 2015, yes, was a correction year. You've got 2018, 2020, 2022, and now this correction in 2025. So what I'm talking about here is the swings to the upside. This move, we had 3 large swings that were 6 weeks or greater. 1, 2, 3. The previous move into the 2021, 2022 top, you had 1, 2, 3 swings of 6 weeks or greater. This correction to this correction, 2018 to 2020, you had 3 swings, again, of 6 weeks or greater. This correction, 2015 to 2018, 6 weeks or greater. Now this correction going even further back, 2011 through to around 2015, you had 2. There were a couple here that were around 5 weeks, but for all intensive purposes, you're at 2 swings with 6 weeks or greater. So pretty interesting to see that the market can run for quite some time, but within significant moves between heavy corrections, you generally see 3 weekly swings of 6 weeks or greater. So I'm noting that now because we're on alert. Yes, it could still be a fair bit more time, but we're at 6 weeks now. So it's unlikely that you really do get to anything more than about 8. You can see the numbers here. There's 110, 210, there's an 11, there's a 9. We didn't get anything 10 here in the last one. But if we get to this sort of 3 times of 6 weeks or greater, generally over the last 10 to 14 years, you would generally see a pretty significant correction compared to the times that you're in. And I say that because of 2015, but these corrections are pretty decent. So if that means we've got roughly 2 years from this point, 2025, I'll be looking somewhere out to late 26, maybe into 2027 for a rhyming of the cycles and the swings. So we're on alert now for 2026, 2027 for the stock market. And I want to make a very, very distinct difference between our 18-year cycle that we're using for the US real estate and economic cycle. These are different in terms of their peaks, but of course, everything is within cycles. The 18-year cycle is the overarching cycle. And then within that, you'll have something like the stock market putting in its peak, and then putting in its low before the stock market, moving like that. And then within that, you've got something like Bitcoin, which has been in this period, and then you just be even faster and more volatile on the way up for BTC, and potentially similar sort of things on the way down. It's a cycles within cycles within cycles, and the real estate and economic cycle is the largest cycle of them all. Now, the moment you've all been waiting for, we're looking at the USDT dominance and altcoins along with the crypto data coming up as we're seeing that greed just ease off a touch. The USDT dominance yet again is holding steady here. Yes, it's been a few days underneath our support line here, what I've dubbed it the all-time support line. Now, if this thing breaks down, this is going to send shockwaves through Bitcoin and altcoins and may give you that altcoin season loading. Yes, I talked about stop wasting your time with altcoins and do this instead. And that is primarily focused at getting a monkey brain, jumping from altcoin to altcoin and trying to make an absolute mozza when it's the first time in your life that you've pretty much ever done any sort of trading. Generally, overall, most of those people fail and lose money. So I'm just keeping it conservative and just talking about play the game on easy mode for yourself, not trying to get crazy and picking all the altcoins that are going to go nuts. And before we get to that point where all the altcoins go nuts, and I'm not completely wiping out an altcoin season because the charts don't suggest that there is going to be no altcoin season. They're just suggesting that it might need a touch more time if it does occur. And if it occurs, we'll see it here, I think, at least, like we've seen in the past, where there's some big declines on the USDT dominance. You can see these big red drops where basically the USDT dominance, the USDT itself is just getting absolutely sold off and put somewhere else. And that somewhere else is typically, for this cycle at least, BTC. And for some of those odd occasions, like here and here, we've seen them go into altcoins, but then quickly come back into USDT and into fiat and into BTC, which is why we've continued to see the Bitcoin dominance also climb. There has been some shock waves to the downside, but then Bitcoin dominance climbs, shock waves, Bitcoin dominance climbs, shock waves, Bitcoin dominance climbs, and it's basically been the same thing since the 2022 cycle low. So yeah, there are a few people that have done pretty well with holding for months on end, but generally speaking, playing easy mode, Bitcoin has been the way to go. So that's a look at the USDT dominance. It hasn't broken yet, but it's still just on that border now and looking, I dare say, better by the day, only because we've seen a couple of days now with closes underneath this line. The next levels, you can see this low, 4.4, this low here, 4.4. This is where the previous highs were getting rejected before it put in a higher low and then took off. Again, roughly around that 4.4. So that's where my next alert is sitting here. You can see it's 4.35, just to give us that little bit of a clear leadway to hopefully get that drop. Bitcoin to go nuts, alts to go nuts. But in the meantime, like we just covered with BTC, at least a pause here. If, in fact, we get a higher pause, and that leads me to the next thing, that is over to total 3, and that could be your altcoin season loading. But just remember, the altcoin seasons have been quick this cycle. You can count the weeks yourself, 1, 2, 3, 4, 5, and then basically lose 50% of your money in 2 weeks. 1, 2, 3, 4, 5, 6, lose 50% of your money in 4 weeks. And if you want to count any of these as altcoin seasons, 1, 2, 3, 4, 5, pause, 1, 2, 3 with a reversal, 4, 5, then again, lose 50% of your money in about 2 to 3 weeks. It isn't an easy ride up in this altcoin season. We are at 50%. We do have a small double top here. If it can break out, get above that $960 to $1 trillion level, then you could be in for a nice long ride with this alt season. Then the fun times could begin with an alt season, at least from the breakout up to the next resistance level, somewhere around that sort of 106 to the tops here at 1.1, 1.16 for some round numbers. Now, the clear signs would be an absolute mozza of a breakout above those highs. But again, remember where we sit in the overall cycle. We are 131 weeks from the low. And generally, most of these cycles have been about 150, maybe even extending out to about 160 weeks when you look back to the first cycle that went into roughly 2013. This one here was about over 1,100 days from bottom to top, whereas these cycles were about 1,060 odd days. Now, in any one video, there's often over 30,000 views on these, so sometimes up to 40,000, and everyone is in a very different situation when it comes to their trading and investing. Now, if you're still not sure, link is in the video description for TIA Premium. That is on sale this week. Navigate the end of the cycle and your trading plans, whether it's across crypto or the stock markets. Just make sure you have your own plan, because as I said, everyone's in a very different position. Now, the position, there's my segue into the crypto sentiment and the data here. Fear and greed is at 71. So it is just having a bit of a cool off here, like we've been covering. It hit the greed just a few weeks ago now, 9th, and then just an extreme greed, pull back, and now it's pausing again. To me, the markets needed this, as we'll cover with the weeks. So I'm not going to continue to recap on that. You can see things playing out in that sense. So the market's just needing that bit more time. We've seen a pickup in the last couple of days again, which is a good sign with this higher low on the search terms for crypto and Bitcoin. In this case, crypto has picked up. So I know I keep coming back to this. Stop wasting your time. Just have something clear in mind that you want to do. It's something you're going to execute on. If it's just a couple of alts, great. If you're trying to do 50 or 30 different alts because you're not sure which one, most likely something is going to lose, or you're just not going to be positioned big enough in a particular altcoin for it to be even worthwhile, which will then lead you holding on for something, trying to wait for that 1000x when it might only give you a 10x. So you just need to be positioned a lot better. This is much more promising now, seeing as crypto's at 32. For the first time, have to go all the way back to March here. It was at 44. So this is the highest reading for crypto search term that we've seen in just over 2 months. Bitcoin also on the way up yet again, putting in higher lows, higher highs. That's a good sign there. Still a little quiet on the exchange volume, 220 million liquidated after that James Wynn, I think it was, who put in like $1 billion trade. Also got liquidated yesterday. Longs down 80, shorts down 137 million. So you're pretty much hitting around the averages for this stage of the cycle. A $250 million used to be huge money, which is 250 million, of course, but now it's sort of sitting around the low end, getting close to sort of the medium end. You're sort of looking around that 300, 400, 500 million for something average. So this is just below average, but still not as bad as some of the days before there, only looking at around 100 million. And the exchange volume overall has also remained higher, but just in the short term, you got a little bit of a lower high and a higher low forming here. So very short term with the public holiday in the US over the last couple of days. So looking forward to this data coming out in the next couple of days to see if we've picked up. So I've looked at the total market cap here, total 3, which is now sitting at the 900, a break higher. Remember your swings, go to your GansWing Pro, turn your swings on, check out where the trend is sitting, higher lows, higher highs. You can see the tops put in there, and then you can use some of your extensions to give you a bit of a read on where this market might go next. You can see we did 100%, almost to the dollar, 100% repeat of that first range out. Let's take a look at where this next range might head, where the 50% levels might come in. 940 for the extension here. And if we get a breakout, look towards somewhere around that $1 trillion for the altcoin market. Total 3 versus BTC, that was also on yesterday's video, just looking at these alt seasons. Now, if this is a short term, you'll see it on the charts, probably lower highs as we've seen all the way from 2022. This is on the monthly with 4 days to go. So just watch if there is a little bit of a fake out here, and we continue on just for a bit longer. But something that is actually working out at the moment is, of course, Ethereum. $2,600, hitting resistance here at around 2,750. And for my breakout point, I'm really liking the tops here at about 2,800 and 2,850. There's the swing top, 2,855. Now, using the same analysis, 5 weeks to the upside here for Ethereum. Yes, people will be looking at colors and asking about colors. We're talking about the bars in the swing itself. So basically the momentum of the market, that's what this thing really gives you an insight to and an edge when it comes to other indicators. You're looking at the momentum here. We got 5 weeks up. So Ethereum in this cycle has done more than 5 weeks, but not very often. You got 5 weeks back here in 22. You got 6, 8, 7, and 6. So 1, 2, 3, 4, 5. This is the 6th time that it's done 5 weeks or more in a total of 154 weeks, which is almost dead on 3 years. So it doesn't happen very often. Yes, it can extend to 6. But once you start getting to 7 or 8, very unlikely. You've only got 2 options for 7 and 1 for 8. So this could, if this does extend, this would then extend the count to this week, which is 7. If this pushed higher and broke 50%, that's going to be great. Ideally, it happens this week because it would be even more unlikely that you get to the 8th week. But if it does this week, that would be 7 weeks. And hopefully we see it somewhere around 28, 29 and close above this swing top. And very least close above the 50% level. That could then set it up for further upside, which would lead maybe to our alt season here, which is potentially setting up. We haven't seen a breakdown of the lows yet either. We haven't seen a breakdown, but ETH USD is at least holding its ground here, even though, quote unquote, time is running out for this swing. So doesn't mean that its time is running out total, but just for this swing. Look, 8 weeks and basically paused for quite some time. Here's 8. It didn't break out again until 2 months later. Gave you a fake out here 5 weeks, then pulled back and then started to break out 9 weeks and then took out those tops in the 10th week. Whereas from this high, 7 weeks, big pullback, didn't break it. 6 weeks here, didn't break it after that point. And it only happened that it broke out in this zone here, 5, 6, and 8. Whereas these two on those extensions, it did not break out. So things are at a bit of a critical turning point here. We get the breaks, great. We need to hold, consolidate, and then push again. If the markets break and pull back underneath these levels, getting everyone excited, which we all know everyone's waiting on these alt seasons, and then pulls back, watch this date here. That gives you the exact blueprint to what has a higher chance of happening next. Like and subscribe, and I'll see you guys back here at the next video. Stay tuned. Peace out.